accepted as tax day. Sometimes it floats by a day or two depending on the weekend or Washington, D.C. or whatever, but it's April 15th. Happy April 15th to you.
Happy April 15th. And when you think of tax day, you think of frowns, people very angry, people sorrowful. And then we have the funniest man alive on the show today saying why tax day is something to be cherished and celebrated.
He is the funniest man in accounting, CPA Ken Apple. Good morning, Ken.
Good morning, Rob. Good morning, Bill.
Now, come on. You got to do better than that. My wife's sitting at the edge of a desk now, listening to the radio, saying, Ken's my favorite radio personality.
Got no jokes for you. I was in the office till midnight last night. I was back in at 8 o'clock this morning.
Yeah, I'm surprised we got you today.
No prepared material.
Yeah,
I'm surprised you got me, too.
I just took a shot. I said, Ken, any chance? I know this is an insane time of the year for you, but... And he accommodated the request, too. So, Ken, it's tax deadline day. What are the odds of somebody dropping off information to you today and getting their taxes done today?
Dropping off their information, 100%. I'll see several people today that are just dropping off their information. Getting anybody to look at it at all, 100%. Okay? I'll hit a button and file an extension. But, yeah, if you haven't done anything with your 2024 taxes yet, you have to do something today.
By what time?
Well, if you're filing electronically, by midnight. So you can file an extension today. You can file your tax return today if you've got everything ready and you just haven't done it yet. But you have to do something today. You can file an extension. It gives you an extension of time, 6 months extension of time to file your tax return. It does not give you any extension of time to pay any taxes that might be due. So you have to at least estimate whether you're going to owe money or not and how much, and send it in today.
And if you are short in your estimate, what happens?
Then you get penalized. You get both. You get charged interest and a penalty for having paid your taxes late, because today is the day that they're due.
So you should overestimate how much you think you owe.
Absolutely.
All right. Now, what if you owe a bunch of money and you don't have the money to pay it? Now what do you do? What are your options?
Well, you can borrow it from the federal government, which is what you're doing if you don't pay the taxes today. Most people would be better off borrowing it elsewhere if they can. I've told people even get an advance on a credit card. Even at high credit card rates, you're still going to pay less than you're going to pay with the federal government, because on your credit card you're just paying interest. For the federal government, you're paying interest plus a penalty.
If you are freaked out and panicked today because you haven't done your taxes yet, and the way you see it, it's just no chance of getting them done today, what's your advice to people?
To file the extension, and most people's income is pretty steady. Now most people's income is up for 2024 from 2023, just because of interest rates on deposits. So certificate of deposit rates are way higher in 24 than they were in 23. So most people have more investment income. So you may owe money when you've never owed money before, or you'll have a smaller refund than you've had in the past. So it hurts nothing if you send them money and you don't actually owe it, because then when you actually file your tax return, you just get it back.
So I'm hearing about a lot of identity theft, people who wait later in the tax season to file, sometimes find out that somebody's already filed with their identification number, and that there's a way you can get a taxpayer PIN or something that would make a unique identity for you. How do you get that taxpayer PIN, and do you need it?
Yes, so the identity theft as far as filing taxes is actually down from what it used to be. The IRS has gotten pretty good at receiving a tax return and recognizing that it's not a legitimate return, and they don't process it. What they do is they send a letter to the person who supposedly filed that tax return and say, we got this tax return and we don't think it's you. Call this phone number, and you go through a bunch of questions, and then they can determine whether that's a legitimate return or not. So they've gotten pretty good at that. If someone has filed a tax return under your name and social security number, and the IRS did process it, they will automatically assign you a identity protection PIN, and they send you a new PIN in January of every year, and that PIN has to be on your tax return or they won't process it. Now, you can apply to get a PIN if that hasn't happened to you, but you're concerned that it might. You can apply to the IRS and get an identity protection PIN, Pretty simple process, and they'll send you that identity protection pin every January to put on your tax return so they know it's you.
Do you, as a CPA and tax preparer, do that in bulk or in mass for the returns that you do?
No. No, we've had very little trouble with that.
Mr. Stubblefield.
Yeah, Ken, for the extension that you said you've seen several of those today, is that a big process, or is it fairly simple? Go in, sign your name, and get an extension?
Yeah, so electronically it's very simple if you don't owe any money. So you can just go in and electronically file an extension request. You get approval of that extension request back in seconds. I mean, it takes less than a minute to get an approval on an extension. If you owe money, then you actually have to send the money in either electronically or send them a check. Same is true of the states. Most of the states around here don't have a separate extension request. If you've got an extension on your federal return, that gives you an extension on your state return. But if you owe the state money, it's due today also, except in Virginia. Virginia is not due till May 1st.
So if you owe money but don't have the money, what's your recourse?
Okay. Borrow it.
Okay, as you said a second ago. Okay.
Right.
Mm-hmm.
From any source that you can find, or you're going to end up borrowing it from the federal government or the state government. And not only do you pay them interest and penalties, but most people don't really want to be on a first name basis with the IRS. You know?
On a first name basis, we've heard a lot about the staffing levels of the IRS going down. Have you noticed a less brisk or slower processing of material than what you had seen in years past?
No, there's no loss of time on the processing because it's all electronic. Haven't really been able to get through the IRS to ask a question since COVID, so it hasn't improved or gone down since then.
Ken Apple, CPA, our guest here on Tax Day. Ken, what are some common mistakes people make on their returns when they do them by themselves?
Mostly math errors. So I know yesterday you had the math teacher of the year on.
Yes, she was delightful.
You should have her in the room when you're doing your tax returns.
Get a math teacher to help you with your taxes.
I would have liked to have had her in my office yesterday because I had a client that owed $11,000 this year and couldn't understand why they made less money this year and still owed the same that they owed last year. And I said, well, last year you owed $16,000. I said, yeah, why do I owe the same? So, I don't know. I told them 3 different ways that they owed $16,000 last year and $11,000 this year, and the question still came back, why do I still owe the same as I owed last year?
Well, it's spring break. You may have been able to hire her out for the week. It could have worked.
Yeah, I would have liked to send her to see the math teacher of the year.
What other mistakes do people make on their returns?
So if we want to talk about West Virginia for a minute, we have a new credit in 2024 that people don't want to miss, and that's your personal property tax credit. So this is brand new credits, first year for it. If you remember, there was an initiative on the ballot in 2022. It was an amendment to the Constitution that failed that would have potentially eliminated the personal property tax on cars, right? So the legislature's workaround on that was to create a state income tax credit for the amount of personal property tax that you pay on your cars. And 2024 is the first time that credit is in existence. Everyone who paid their personal property tax the second half of 2023 and the first and/or second half of 2024 should have gotten in the mail in January a credit form from the state that told you how much credit you were entitled to, and then you put that credit on your personal tax return and you get that money back. A lot of people either did not get that form or didn't recognize what it was. I've had quite a few people who have come in without it, and I've sent them searching for it. The state actually has a good website set up on the state tax department's website where you can go in and get that form for yourself if you didn't get it or you misplaced it. But it's a potential huge credit. It's whatever you paid in personal property tax on your vehicles for potentially 3 halves if you paid them all in 2024. I've had credits as low as $20. I've had credits as high as $3,000. And when I'm talking about a credit, that's actual dollar for dollar money back in your pocket. So you don't want to miss that credit. Now, I will tell you that I've seen a lot of those credit forms that are wrong. They have items of personal property that you paid personal property tax on that come back on that form as ineligible for the credit, and they're actually eligible for the credit. State Tax Department has a procedure for how to fix that. It doesn't work. I tried it with several people early in tax season. Their refunds were held up because they claimed a higher credit than what was on that piece of paper that the state sent out. But watch that. If you've got a lot of older vehicles, for example, for some reason they're coming up as ineligible. I talked to the State Tax Department. They say they just use what came from the assessor's office. I talked to the assessor's office. They said, we provide it to the state. We don't know what they do with it. So nobody's taking responsibility for it, but a lot of those forms are wrong.
Shocking, right? Shocking. Hey, what else in regards to senior citizens on your West Virginia state income tax form, Ken, something that a lot of people miss because they may not know about it?
Yeah, so that's a credit that's been around for a long time. The state of West Virginia has a homestead credit that most people are familiar with because when you turn 65, you actually need to go into the assessor's office and apply for your homestead exemption. They want some proof of identity to show that you're over 65 or that you're under 65 and permanently disabled. And you qualify for $20,000 of assessment off of your personal property tax bill. So when you get your personal property tax bill from the county, that is already off and it's already been lowered. It's probably been 20 years ago now that the state developed this, what I call an additional homestead exemption that you qualify for on income. So not everybody gets it, but if your income is low enough, you get an additional credit on your state income tax to help you pay the real estate taxes on your house. And that credit varies by county based upon the housing cost in each county. But if you are eligible for that and you don't claim it, just like the personal property tax credit, if you are eligible for it and you don't claim it, you're not going to get a letter in the mail saying, hey, you missed this credit, here's some more money for you. They're not going to do that, so you have to claim that yourself.
Can you go back and amend previous returns if you've missed that one?
You can go back 3 years and amend, yes.
That's the cap, 3 years.
Correct.
Is that the same for federal?
Yes.
Very good. Some changes on the federal form this year, Ken.
Not a lot of changes on the federal form this year. There was, last year was an election year. So they tend not to mess with the tax code in an election year because nobody wants to run having voted for a bill that potentially increase somebody's tax. So it's very, very similar. Of course, there are things in the tax law that go up each year for inflation, and there are things that don't go up for inflation. So the standard deduction went up, the tax brackets went up, but a lot of other things like the formula for how much of your Social Security benefits are taxed, it stays the same. It's been the same since 1986. So some things change, some things don't.
For clarification, Ken, the homestead exemption you only have to file one time. You do not have to do that annually. Is that correct?
That is correct with the county, yes, to have that homestead exemption on your tax bill. But if you're eligible for the additional homestead exemption on your taxes, you have to file that every year.
So you probably are the wrong person to ask this question, but I'm going to ask it of you anyway because you're here. And that is the IRS almost annually, I suppose, adjusts the brackets for inflation.
Yes.
But they don't adjust many of the other markers for inflation that have been in place for so many years.
Correct.
Is there a particular reason for that?
It's based upon how the law was written when it was passed in the first place.
That means what?
Okay. So in 2017, we had a major federal tax bill. We haven't had a major federal tax bill since. When that bill was passed, one of the things in it was raising the standard deduction and indexing the standard deduction for inflation and indexing the tax rates for inflation. So those are locked in law, and every year they'll go up. Some of the other things that are not adjusted for inflation, it's because when they passed the law, tax and Social Security benefits, for instance, that was passed in 1986. And there were no inflation adjustments in that law that they passed in 1986. So the idea in 1986 was that if you were rich, you should pay tax on some of your Social Security benefits.
What defined rich in 1986?
The formula that they used in 1986 probably was a decent formula for 1986, but the dollar value that they used was not indexed for inflation. So what made someone rich in 1986, I don't think makes them rich in 2015, or 2025, or 2035. I mean, it's etched in stone. So very few of my clients in 1986 paid tax on their Social Security benefits. Virtually all of my clients pay tax on their Social Security benefits now.
When you pay tax on your Social Security benefits, is that federal and state?
Depends on what state you live in.
Well, if you don't have state. Well, I guess it's true. They all have laws to whether or not state is taxed, or Social Security is taxed in the state.
So Pennsylvania does not tax Social Security benefits. Maryland does not tax Social Security benefits. And West Virginia is in the process of not taxing Social Security benefits.
They did pass a law some time ago that you'd have to be over $100,000 to have your Social Security taxes, or Social Security income taxed, correct?
That's correct. That law has been in effect for 5 years now. And 2 years ago, they passed a law that extended that benefit to everyone, but we're in the middle of a phase-in period.
When will that be completed?
So the first year for that was 2024, the taxes that we're working on now. So 35% of your federally taxable Social Security benefits are not taxable in West Virginia for 2024. In 2025, that'll be 65%, and in 2026, it'll be 100%. Another reason why we're never going to reach another trigger on the reduction of the state income tax.
Is there still a requirement to have health insurance?
There is not. So there's no longer, they passed a law that said you no longer need to prove that you have health insurance on your tax return. They got rid of that part of the law, but they didn't get rid of the reporting part. So hundreds of millions of forms go out every year to individuals showing them that they have proof of insurance, and they all bring them into me when they have their taxes done. And I don't need it because you don't need to have proof of your insurance. So I don't know how much money is being spent sending out these forms that aren't really required, but they didn't change that part of the law.
Yeah, I still get that form in the mail every year, and I thought that they had rescinded that requirement.
Yeah, so the requirement to have the insurance was rescinded, but the requirement to send out the proof of insurance was not.
Makes sense. It's federal.
Ken, not in West Virginia as much as, say, Florida and California, a lot of the insurance companies are reneging on their paying out for loss, and there's been a lot of loss. If that happens, what recourse, what relief can you get from income tax?
Yeah, so that's in tax terms, that's called a casualty loss, and there is a federal form for a casualty loss. And if your loss is high enough relative to your income, you can get a deduction for that uninsured loss.
You good on that one, Bill?
Yeah, I'm good on that. That
Okay.
you answered my question. I guess the question was, it depends on how much income you have. So,
Right.
yeah.
So my son's wife works at a university, which means that he gets to take graduate courses basically for free. But at the end of that year, he gets a 1099 for the value of those courses. How is that reported as income?
Yeah, so that I won't say that they're doing it wrong, but it actually should be on her W-2.
Yeah, actually it is. I got it wrong, not them.
Okay, yes. So it gets taxed to her just like any other wages. It's just as if she got a raise.
So whatever
and use that money to pay for school.
Whatever the cost of that credit is, that's what counts as a wage to her.
Right.
Do you see anything on the horizon, in both at the state level and the federal level, that's going to make a radical change in our income tax or our taxes?
I don't see it on the federal level. I will say that both presidential candidates last year talked about not taxing Social Security benefits on the federal level. I haven't heard much about it since the election, but that's a change that I think is due, not necessarily eliminating the tax on Social Security benefits for everybody, but maybe if they just went back to 1986 and adjusted that limit for inflation, if you did that, probably only the people making over $200,000 a year would pay tax on their Social Security benefits.
How about they don't tax it until you've at least recouped what you put in? This would be like me putting money into a savings account, and then I take it out, and they go, we're going to tax that. Not the interest, all the money you put in the savings account that you already paid taxes on to put in there.
Okay, so you're showing your age.
Oh, I sure am.
Okay.
I'm showing my rage, too.
All right. So people our age regard Social Security taxes that taken out of our paychecks as what the promise was back when they created Social Security. It was, we're going to take this out of your paycheck, we're going to put it away for you, and then we're going to pay it to you in retirement. All right. They don't talk that way anymore.
No.
Your kids and grandkids just regard it as a payroll tax. They don't have any expectation that they're ever going to get any of that back. So if you regard it coming out of your paycheck as just a tax, then when you actually receive your benefits, they even refer to Social Security benefits now as entitlements, just like it was welfare or something. The three of us think of it as, I'm getting my own money back, and I already paid tax on it once, so why are you taxing me on it again? That's not the way they want you to think. When it comes out of your paycheck, it's a payroll tax you're never going to see again. In your old age, if you qualify for a Social Security check, God bless you, but it's free money from the government. It's not your own money coming back, so why shouldn't you pay tax on it?
Well, I like to think with common sense. And if I had a bunch of money taken out of my paycheck, put into an account that I can go onto the Social Security website and see here's your account and here's what you paid, and as a result of that, here's what you get. To me, that sounds like I'm taking money out, putting it into a savings account, and when I start to get it back, I shouldn't be taxed on anything until I've taken all of it back out. Anything above that is then earnings.
I don't disagree with you, but we're of similar age, okay? If you ask your kids the same question, you'll get a completely different answer.
Yeah, they'll just regard it as money taken that they'll never get back.
It's just another tax.
Yeah, well, you know what? They're wrong. That's why I'm dad and they're kids. That's how it works in my family. There's only one person that can be right. That's me, Bill.
Yes, and that's around the studio the same way, Rob. We know that.
That's why I'm the host. That's how it works. Ken, I got about a minute left. Final thought from you on this tax day 2025.
So final thought is do something today. Okay, if you've prepared most of your tax return and just procrastinated to today, get it done, file it. If not, at least get an extension filed today. And even if you're going to borrow that money from the state or federal government, so you've got an extension, you owe money, you're not going to pay it with your extension, the states and the federal government have two penalties. They have a penalty for late filing of your return, and they have another penalty for late payment of your money. So at least if you file an extension today, even though you owe money and you don't pay it, you'll subject yourself to the late payment penalty, but you won't have a late filing penalty.
Good stuff. Ken, thank you kindly. If anybody has a question for you, how do they reach you?
I'm at 304-263-8981.
Hope you enjoyed your half-hour break from being buried in tax forms. Kenny Apple, foundingest man in accounting, ladies and gentlemen. And we are back with more right after this.